The title of this video is Fed Incoming. Does it matter? Well, it certainly matters, but something that I don't think matters as much as the Fed, but has been dominating the headlines of late, more so than the Fed, is the Russia-Ukraine tensions. Why do I not think these matter so much? A lot of these companies that we buy, that we trade, that are listed on public exchanges, are first of all American companies, and second of all, have very little, if any, of their profits and revenue tied to Russia and Ukraine. Obviously, some do. Some are specific to Russia and Ukraine, for example. There's a wide variety of stocks in this market. And of course, that will be a specific story for a specific stock. I can give one that I talk a lot about on this channel that I feel I need to address, which is Schlumberger. Schlumberger does get some revenue from Russia, and there's been some negative downside volatility in that stock because of that, which I think is unwarranted. And if it continues, I will be buying that dip. Why do I think it's unwarranted? Well, we know the energy sanctions aren't on yet. They aren't on yet. I don't expect them to be on. They aren't on yet. JP Morgan, a JP Morgan analyst, claims that the stocks are down because shareholders might say that they have to get out of Russia. I think that's the most absurd thing I've ever heard in my life with regards to stocks. Yeah, the takeover type situation happened in Exxon, but Exxon didn't do anything they weren't already doing after that. Second, this is Schlumberger, okay? It's an oil services company. The only people who own this care about oil services. This is not even a producer. It's not an oil producer. This is a company providing products and services and maintenance to oil producers. I don't think the shareholders are going to do anything. Second, if Russia does impose oil sanctions, I still think it's bullish for Schlumberger because oil is getting expensive. We're going to have to get that oil from somewhere. We're going pretty hard on the solar renewable stuff, and it's not good enough. That's why we got those problems in Europe. If we think we got it bad here, they got it worse. So we're probably going to have to increase production, which is going to mean a lot of cash flow for companies like Schlumberger. So yes, Russia exposure in that particular name, which I discuss a lot, not so concerned. Russia-Ukraine is definitely dominating the market right now. There's no doubt about that. Look at the 10-year Treasury yield. Massive plummet. I think that's quite unwarranted, but it's a flight to safety move, it seems. A lot of people are flying to safety in those names. Again, I think it's unwarranted. I think this is a local low possibly. I say possibly because what I actually care about and what I'm actually worried about to some extent, and I think provides a lot of uncertainty and makes the flight to safety move in the bond yields not make any sense, is the Fed, which is about to likely start to raise rates. A lot of people, kind of piled onto that flight to safety move because they think Russia-Ukraine is not going to impact the Fed. The Fed has to get inflation down, okay? And I don't care what's happening in Russia-Ukraine. It doesn't mean that we need to have a 0% federal funds rate and an expanding Fed balance sheet when the economy is strong and there's massive inflation, right? Like domestic issues, kind of important right now, right here. So this issue, which I don't think impacts U.S. anything U.S. basically, nothing. We've basically given the maximum sanctions and it hasn't had any impact on your life at all. Not yet. Maybe we're going to see something at the gas pump. We got Schlumberger for that. They come in and produce our energy. So that's really an American issue, which can be resolved. We'll see if it gets resolved. We heard Devon Energy CEO today say he was mystified by the fact that Joe Biden hasn't called him up in that increased production. It's quite mystifying to me as well. Again, hopefully, regardless of the impact on the stocks, hopefully the right decision is made for the benefit of the people of this greatest nation in all of history. But we will see what happens with regards to that. I just find it quite interesting because we are so involved in that space over here on this channel. Anyways, stocks are down. but I think the Ukraine, if it's isolated to Russia, Ukraine, sorry, moving the mic, I think we have a buying opportunity. I think the market has gone down quite a little bit, unwarranted so. I think yields have fallen unwarranted so. If we can ceteris paribus look at Russia, Ukraine, I think the local bottom is in. The reason why I just want to keep it at ceteris paribus, all else equal, is because there is another force that I think is quite important that presents high levels of unknown. The Fed. The reason why it's so unknown is because if you go throughout the past 100 years, after the first rate hike, more times than not, the market is actually up. I believe it's 3, 6, or 12 months later. So the market doesn't have a real adverse reaction. However, the last 3 times, I believe it was like 2000 or 2001, 2005, and maybe like 2015, the market has been down. So in recent times, the market has gone down. And interest rates in all 3 of those recent times have been lower than they have been historically, each one proceeding to be lower. Which has made me to come up with this new economic theory that I've thought about, haven't written anything about, but it's something we're about to find out. Does getting off the zero bound, so going from 0% interest rates to higher, have a more meaningful and powerful effect than going from, let's say 5 to 5.25%. The reason why I say that is because banks can borrow money from each other for free. So liquidity is high, they're, transacting frequently. If they all of a sudden have to pay in order to do a transaction, does going from not paying to paying have a more profound effect than from paying to paying just fractionally more? It's a theory, I think it could, but I don't, this is just a hypothesis we're going to have to see. So, whoa, this is a lot of information, kind of scary, kind of not, because Russia, Ukraine, you're saying it's not anything but the Fed. What do we do here? Here's what I'm doing. There's a lot of unknowns, and I'm acknowledging the presence of those unknowns, and I'm not going to try and outplay the unknowns. There's some I'm going to. I do have a fractional gap Friday call on earnings. That is one way I'm playing an unknown. But with regards to everything else, I just want to play how I can win. And I think I can win by buying stocks that I know are cheap. Even if interest rates were very high. Even if interest rates were 5 or 10%, I think are very cheap. And those stocks, I'm happy to buy here. So, I'm buying those, I'm in those names, and I'm going to hold them and weather the storm. I have options, but I'm really favoring stocks right now because I don't want to play the volatility. I'm not trying to play volatility right now. Yes, it's going to be volatile, but we don't know which direction. So unless you're doing complex straddles and that kind of stuff, maybe I need a little more of that. Maybe I need a hedge, but that's not what I'm doing right now. What I'm doing right now is playing valuation and playing long-term game. And I think if you stick to playing valuation and long-term game and you buy stocks priced well at good valuations, you can be okay to put cash to work. And you can feel good about whatever happens. You can even buy your stocks and not look at your portfolio and be okay, in my opinion. But if you're going to try and play rates one way or the other, well, it's very difficult because the market's down and the market knows rates are coming, but rates every time in the last 3 have made the market go down more. However, historically, have not. However, we're in a new phenomenon where we're going off the zero bound. So a number of different forces at play. Quite interesting. Russia, Ukraine, in my opinion, maybe exacerbated things when it shouldn't have. We will see. this is how we're thinking, this is how I'm thinking, this is how I'm thinking for my clients. I feel good about it, and I'm ready to see what happens over the next coming weeks. I love my positions. I don't know if any of you Editas holders out there saw the court ruling yesterday. The stock was up 15% after hours, barely up after, at the end of the close. There's a lot of people not looking at the fundamentals of companies and not considering the product and the quality of the product. And in addition to valuation, those are my two favorite things to consider. So that's where your edge is in this market. When everyone's panicked about Russia, Ukraine, and the Fed, you can win by focusing on valuation and product. So that's today's video. I hope you enjoyed it. And until next time, peace out.